Welcome back to the Quarterly Call. All content is for informational purposes and is not investment advice. Please consult with an investment professional.
Okay, so
We just got the latest shareholder letter from Netflix.
yeah,
I'm sure you've seen
lots
it.
of numbers, charts, all
Yeah.
that.
But tucked away in, there's some real clues about where Netflix is headed in 2025.
Right.
That's what we are going to uncover today.
Yeah, what really stands out to me is how Netflix is coming off a year of just like massive growth, adding 41 million subscribers in 2024 to hit a total of 302 million globally.
Yeah.
I mean, and it's not just subscribers, right? Revenue jumped by 16%, and they, for the first time, cracked $10 billion in operating income.
Yeah. So they're obviously doing something right. But the question on everyone's mind is, can they keep this up? Their 2025 forecast predicts continued growth, right?
Mhm.
We might see revenue somewhere between $43.5 and $44.5 billion, a 12 to 14% increase from last year.
Which is pretty significant.
Yeah, and hold on. Get this. They're aiming for a 29% operating margin, a whole percentage point higher than their previous estimate.
That's ambitious, especially when you consider that the US dollar has been strengthening.
Right.
And that alone, just that, has actually cut their revenue projections by $1 billion.
Okay, so that's a big chunk of change. But I guess it shows how confident they are in their overall plan.
Yeah, exactly.
All right. Now let's talk about those big live events that everyone's been buzzing about, the Jake Paul fight, the NFL games on Christmas Day, all that. Did those actually make a difference for Netflix?
It's easy to assume those were the main drivers. I mean, they were huge events.
Yeah.
But if you look closely at the shareholder letter, it tells a different story. The majority of their subscriber growth actually came from a much wider range of content across different genres and regions.
So it wasn't just about getting people in the door for a big fight or a football game.
Exactly. They're really leaning into that something for everyone approach. And it looks like it's working because, get this, viewer retention for those who signed up just for the live events, it's actually really similar to those who joined for other content.
So people are sticking around.
Yeah.
Interesting. So what does this tell us? I guess it's like the old saying, content is king.
Right.
And they're definitely emphasizing their commitment to producing high-quality, diverse content, especially with a focus on those international productions.
And that makes sense, right? I mean, look at Squid Game. Global phenomena.
Yeah, for sure.
It's not just about subtitles anymore. It's about stories that resonate with people all over the world.
Absolutely. Speaking of big hits, they highlighted Carry On as a case study in the letter. I mean, this movie got so much buzz and had huge viewership. But here's the thing. It never even made it to theaters.
That's pretty wild. It really shows you the power of a platform like Netflix. They can promote content directly to millions of subscribers, and they don't even need the traditional movie theaters anymore.
It makes you wonder if that's a sign of things to come. Like, could they be shifting their theatrical strategy?
It's possible. But they were pretty clear in the letter that their main focus is still on bringing those first-run movies straight to streaming. Those limited theatrical releases they're doing, like the one planned for Narnia, those seem to be more about marketing and maybe snagging some award nominations.
All right.
It's a way to generate excitement, give fans a sneak peek, but the main event is still on Netflix.
Got it. Okay, so let's talk about this ad-supported plan. This thing seems to be exploding. Over 55% of signups in countries where it's available are going for it. And what's even more interesting is that the engagement from viewers on this plan is pretty much the same as those on the standard plans.
Right, and that's huge. It means that the ad-supported plan isn't just attracting people who are looking for a cheaper option, it's appealing to a broad range of their audience. And that's great news for their advertising revenue. They're even working on improving their ad technology platform to give advertisers even more bang for their buck.
Yeah, they're building a pretty serious advertising business alongside their streaming service.
Yeah, exactly.
And to fuel all these investments, they're also raising prices in some markets. But they're quick to point out, of course, that they're committed to providing value, and those price hikes only come after they've carefully considered everything.
Yeah, it's a balancing act for sure. They need to keep growing their subscriber base, but they also need the money to keep making the content people want. And speaking of new offerings, we got to talk about video games. It's still early days. I mean, the impact on subscriber growth and retention is pretty small right now, but they're clearly not giving up on it.
No, not at all. They're focusing on specific genres, like those narrative games based on their own shows and movies, the party games for TV, and games for kids.
It's a long-term play, but the potential is massive. If they can successfully integrate games into their platform, it could be a huge growth driver in the future.
So it seems like Netflix is doing pretty well across the board. They're delivering diverse content, experimenting with live programming and gaming, and being really careful with their pricing and advertising strategies to keep growing.
Yeah, it's impressive, but the big question is, can they keep this momentum going?
That is the million-dollar question. To answer that, we need to dig a little deeper, and that's what we'll be doing in the next part.
Let's do it.
Stay tuned.
I mean, let's be real. They've got some serious competition out there.
Oh, yeah.
Amazon, Apple, Disney. These guys have deep pockets and their own huge content libraries. They're not messing around.
It's a whole new ballgame now.
Yeah.
Viewers have so many choices, and they can easily switch between services depending on, like, what they want to watch or how much they're willing to pay.
Exactly. So Netflix really needs to play to its strengths to stay ahead. And one of their biggest assets is their brand recognition. I mean, they're practically synonymous with streaming at this point. Plus, they've got that global reach, which is huge when it comes to getting content and reaching new audiences.
Right, they were the pioneers, and they've built a solid reputation for delivering quality content, diverse content. And don't forget about those personalized recommendations. They've really nailed that aspect, making it super easy for people to find something they'll actually enjoy.
It's all about creating that smooth, personalized experience that keeps people coming back. But they can't just rely on past successes, right? Their original content strategy has been a game changer. Investing heavily in producing their own shows and movies gives them so much more control over their content and helps them stand out from the crowd.
Yeah, think about shows like Stranger Things, The Witcher, Bridgerton. These have become like cultural phenomenons. Huge viewership, merchandise, even theme park attractions.
That's the power of owning your own content. They're not as dependent on licensed stuff, and they can build these franchises that keep people hooked. And they're not afraid to take risks to greenlight those unique stories you wouldn't find anywhere else.
That creative freedom is a magnet for talent, and it's definitely paying off. I mean, their original content is constantly racking up awards and critical acclaim, which just adds to their reputation.
They're a force to be reckoned with, but they're not slowing down. Their move into live programming is a perfect example of how they're innovating and trying new things to keep viewers engaged.
Yeah, the Jake Paul fight, the NFL games, those were big wins. And now they've even snagged the U.S. rights for the FIFA Women's World Cup in 2027 and 2031.
That's huge. The Women's World Cup is only getting bigger, and it fits perfectly with their strategy of offering diverse and exciting live content.
They're not just dipping their toes in the water anymore. They're diving headfirst into live events. But they're being strategic about it, right? They're not trying to compete with those traditional broadcasters for full-season sports rights.
Right.
They're going after those can't-miss events that generate buzz and complement their on-demand library.
It's the same approach they're taking with theatrical releases, using them strategically, mainly for promotion and awards consideration.
Yeah, like the upcoming Narnia release. That limited IMAX run is going to create so much hype and give fans a unique viewing experience, but the main event is still the streaming premiere on Netflix.
Exactly. It's all about maximizing their reach and impact. They're constantly testing and refining their strategies to stay ahead of the game in this ever-changing entertainment world. And then there's their move into video games. Still early stages, but they're approaching it with that same careful planning and strategic vision they bring to all that content.
What I find interesting is their focus on games that tie into their existing shows and movies. The success of Squid Game, Unleashed, proves they can leverage the popularity of their hits to create engaging gaming experiences.
It's all about building a connected entertainment universe where their content can be enjoyed across different platforms, different formats, and they're not just sticking to mobile games either. They're exploring cloud gaming on TV, which could really open up some exciting possibilities for interactive entertainment.
It's amazing to see them evolve from a streaming platform into this multifaceted entertainment company. They're embracing new technologies, new content formats, but they're staying true to their core mission of providing engaging and diverse entertainment.
They're not just keeping up with the times, they're shaping them. But at the end of the day, their success comes down to one thing: numbers.
Right. Those subscriber numbers have to keep growing. So let's dive into some of the key financials from the shareholder letter and see what story they're telling.
Okay, so their Q4 performance was phenomenal. I mean, they added a whopping 19 million new subscribers,
Wow.
shattered their previous record, and blew past all the analyst expectations.
That's a ton of new subscribers. What's fueling that kind of growth?
It's a few things, really. Their diverse content slate is clearly resonating with audiences worldwide. They're pulling in new subscribers with hits like Squid Game Season 2 and Black Does, while keeping their current subscribers happy with a wide range of programming.
And I'm sure those live programming initiatives are playing a role too. The Jake Paul fight, the NFL games, those brought in huge numbers, attracted new subscribers, and generated a lot of buzz.
Absolutely. Those events showed everyone that Netflix isn't just about on-demand content anymore. They can be a destination for live events too, catering to even more entertainment preferences.
And we can't forget about the ad-supported plan. It's proving to be a popular choice, especially in the countries where it's available. They're bringing in those more price-conscious customers with this plan, expanding their reach and boosting their revenue potential.
It's a smart move, giving their subscribers more options and flexibility, acknowledging that not everyone has the same budget or viewing habits, and all of this is reflected in their strong Q4 financial results. Revenue jumped by 16% year over year, even exceeding their forecast.
That's a testament to their subscriber growth, their pricing strategy, and that growing ad revenue.
And their operating income also exceeded expectations, up a remarkable 52% year over year, which led to a very healthy 22% operating margin.
So they're not just growing, they're managing their costs well and generating strong profits.
They're a well-oiled machine, investing heavily in content, technology, marketing, but they're doing it in a way that makes financial sense.
Their financial discipline is impressive. They're focused on building a sustainable and profitable business, not just chasing growth for the sake of growth.
Right. And their forecast for 2025 reflects this balanced approach. They're predicting continued revenue growth, aiming for $43.5 to $44.5 billion, which is a 12 to 14% increase over 2024.
They're targeting an even higher operating margin of 29% as well, which shows they're serious about profitability.
Right, and it's important to note that their 2025 revenue forecast already factors in that $1 billion hit from the strong US dollar.
That's a significant headwind they're facing, but they're still projecting impressive growth, which speaks volumes about the strength of their business.
They're a global company with revenue coming in from all over the world, so currency fluctuations are bound to impact their financials.
True, but they're not just riding the wave. They're actively managing their business, making smart decisions to navigate these complex global markets.
Their track record speaks for itself. They've consistently exceeded expectations, delivering strong subscriber growth, revenue growth, and profitability.
They're firing on all cylinders. Their financial performance really reflects their strategic vision, their operational excellence, and their commitment to innovation.
Yeah, but let's not forget how competitive the entertainment industry is. They're not just battling other streaming services, they're up against established media giants and emerging tech companies, all fighting for the same viewers.
So what are some of the biggest challenges and opportunities they're facing in 2025 and beyond? What could trip them up and what could propel them even further?
Those are the key questions, and that's exactly what we're going to explore right after the break. I mean, the streaming world is just packed with options now, more than ever. Viewers have so much to choose from.
It's true. So how does Netflix stand out from all the noise? What are their biggest advantages in this fight for viewers?
Well, we talked about it earlier, but their brand recognition is huge. I mean, they're practically synonymous with streaming. And that global reach, that gives them a serious advantage when it comes to content and finding new audiences.
Yeah, they were the early birds, right? And they've built a strong reputation for quality content, diverse content, plus their personalized recommendations. They've really nailed that. Makes it so easy to find something you'll actually like.
It's all about that smooth, personalized experience that keeps people hooked. Oh, and let's not forget about their library. It's massive. Original productions, licensed stuff, international content. There's always something new to discover.
Right. And their commitment to original content. It's really changed the game. By producing their own shows and movies, they're not just controlling the content, they're creating a unique identity.
It's smart. Owning their original content means they don't have to rely as much on licensed titles, which can be pricey and, not always available. Plus, they can create franchises and spin-offs from their most popular stuff, which keeps people coming back for more.
Exactly. Look at Stranger Things, The Witcher, Bridgerton, global phenomenons, huge viewership merchandise, even theme park attractions.
That's the power of owning your content. And they're willing to take risks, invest in different kinds of stories, give their creators freedom.
And that attracts talent and generates awards buzz, which just builds their reputation even more.
For sure. But they're not just sitting back. They're always innovating, exploring new formats, expanding their offerings to keep their audience interested.
Like their move into live programming. They're picking special events and programs like the Jake Paul fight, the NFL games, the FIFA Women's World Cup, to add to their library of on-demand stuff.
It's strategic. They're not trying to be everything to everyone. They're picking content that fits their brand and what their audience wants.
Makes sense. And what about their venture into video games? Still early days, but they're approaching it with the same strategic thinking they use for everything else.
It's really interesting how they're focusing on games that connect to their existing shows and movies. Squid Game, Unleashed, showed that they can use the popularity of their hits to create really cool gaming experiences.
It's like they're building a whole entertainment ecosystem where you can enjoy their content in different ways on different platforms, and they're not limiting themselves to mobile games either. They're testing out cloud gaming on TV, which could open up all sorts of possibilities for interactive entertainment.
It's pretty amazing to see them go from a streaming platform to this multifaceted entertainment company. They're embracing new technology, new formats, but they're still all about that engaging, diverse entertainment.
Right. But at the end of the day, it all comes down to subscribers. So how are they making sure those subscriber numbers keep going up in such a tough market?
Well, they're pouring money into content, always adding new shows, movies, licensed stuff, international content. They want to appeal to everyone. And they're using those data-driven recommendations to help people find content they'll love, which keeps them engaged and coming back for more.
Plus, they're adding value by expanding into new areas like live programming and games, giving people even more reasons to stay subscribed.
Exactly. They're also walking a fine line with pricing and advertising. They need to be affordable to compete, but they also need enough money to fund those big content investments and keep growing.
And that ad-supported plan plays a big role in that strategy, bringing in price-conscious customers and opening up a new revenue stream.
It's a win-win. They're expanding their subscriber base, making money from ads, and giving viewers more choices. So yeah, the future looks pretty good for Netflix. They've got a strong brand, global reach, huge content library, and they're not afraid to innovate.
But they can't just sit back and relax. The streaming world is always changing, and they need to stay ahead of the game if they want to stay on top.
Absolutely. They got to keep investing in amazing content, expanding their offerings, and adapting to what viewers want all over the world.
So what does all this mean for our listeners? Well, if you're a Netflix subscriber, expect more of the good stuff. Diverse, high-quality content, cool new features, and more entertainment options.
And if you're an investor, keep your eye on Netflix. They're leading a fast-growing market, and they seem to be in a great position for continued success.
But like with any investment, do your research, consider your risk tolerance, and make informed decisions.
Couldn't have said it better myself.
Thank you so much for tuning in to the Quarterly Call. For more episodes, please remember to rate and follow our show. Until next time, stay curious and stay informed.